Ever felt overwhelmed by the different trading strategies in the market? Well, you're not alone. Do you want to transform your trading style so that you can make more profits? I'm going to show you how I trade the markets in a very simple approach, with no complicated setups, no indicators, just pure price action and chart analysis. Hi, I'm Hemant. Welcome to He-Man Trades. I've been trading in the market for the past 4 years, and my mission is to simplify trading so you can understand how to trade confidently and avoid the mistakes that many traders face. When I first started out, I was hooked on trying out all the strategies and every indicators that's available in the market. You name it, like the RSIs, the MACDs, the Bollinger Bands. I've tried everything. Instead of making money, I was losing time and confidence. Then I realized something, that trading isn't about finding out the best strategy or the best indicator that's available. It's about finding out or understanding the history of the stock and its price movement. This changed everything for me. I completely stopped relying on indicators and different strategies and focused more on pure price action and chart analysis. Now I want to share this approach with you so that you can avoid the mistakes that I made. Whenever I take a trade, I use a 4-step framework. The first step is to identify the trend of the stock, then analyze the price action, check the volume, and then set realistic targets and manage your risk. So the first step is to find the trend of the stock. We find this by doing multi-time frame analysis. So we look at monthly, weekly or daily time frames to see if the market is in an uptrend. If the market is clearly in an uptrend, we can say that the market will be further going up. So in this stock, we can see in the monthly time frame, the market has been in an uptrend for a very long time. Even if you look at it in a weekly time frame, you can see that the market is going in an uptrend. But whenever we say that the market is an uptrend, it doesn't mean that the market will be going up like this all the time. The market will be actually going up in some positions, and then at some times it will be consolidating. And then it will go up again, and then it will consolidate. So what we are looking for are these levels of consolidations. Whenever we see these levels of consolidations, we'll be analyzing that chart for good patterns. Now let's take an example and see how to analyze price action. In this example, we are taking a weekly time frame. In this weekly time frame, we can see that the market has been going in an uptrend. And during this uptrend, while the market was moving up, we can see that the market was consolidating at this level. So when the market is in consolidation, we can draw patterns, and this is how we draw patterns. We can clearly see that the market has been rejecting from this level and this level and this level. So these points of rejections are called resistance levels. And after the rejections, when the market came down, it got a clear support and went back up again. So these are levels of support. So when we connect these resistance levels and support levels, we can draw a pattern. And I normally draw 2 types of patterns. One is a triangle pattern and one is a channel pattern. So these channel patterns and triangle patterns can be drawn when there are at least 3 points connecting these levels. So we should have at least 3 points to connect these levels so that we can confirm that it's a strong level. So once we connect those levels, those resistance levels and support levels, we can just wait for a breakout and take a trade. When we analyze these chart patterns, we can draw these patterns in any time frame. The monthly time frame, the weekly time frame, or the daily time frame. The best 2 time frames that we can use is monthly time frames and weekly time frames. But those time frames are very rare and takes a long time to form, because look at this weekly time frame. This weekly time frame has been in the formation for at least more than 1 year. But what we are trying to do is we can look for weekly time frames and search for breakouts. So when we get weekly time frame breakouts, the market will be going up, and then we can look at better confirmations in daily time frames. So in this example, we can see that after this weekly time frame has been broken out, the market went up and then there was a small consolidation, and this consolidation happened in a very a small time frame like 2 to 3 months, we can see that it only took around 127 days to form this pattern. And this is a daily time frame pattern, and we can use this time frame patterns as well to do breakout trades. So how can we confirm that the pattern has been broken? That is the third point, where we have to look at a good volume breakout. See, in this level has been rejected like 4-5 times, and at this level we can see that a daily candle has been closing above that level. And it is not just a daily candle. This is Friday, May 26th. That means the weekly candle has been also formed, and that weekly candle has also given a good breakout. So we can take an entry here and get our profits. So coming to the fourth point is that we have to keep good target and stop loss. If we took a trade here, our target would be 2 times our stop loss. That is, our stop loss should be just below the trend line or just below the first swing of that breakout. And the top profit, we can say take at least 1:2. When we take 1:2, that means whenever we have a losing trade, and we can, in the long term, we will always be profitable. Here we can clearly see that it went more than 1:2. It went at least 1:5. But 1:2 is our minimum target profit. We can take even more if you have the risk appetite. So even after this breakout, we can see that the market has been consolidating, and we got a breakout here again, and then it went up. The market consolidated again in a triangle pattern, and we got a clear breakout. And always see that the breakout should be very clear. It shouldn't have any wick, very big wick on the top. A small wick is okay, but a very big wick is not good. It can go back down. We need a strong breakout with a good volume candle. In this example as well, it went up again. We had a consolidation pattern, and it has a good breakout and went up again. So since the market is in an uptrend, we can always look for good consolidation patterns like these and have a breakout trade. And the momentum is with us. So since the momentum is with us, we can have a good chance that the market will keep on going up. So this is how I trade, and is a very simple strategy. So what do you think about this approach? Let me know in the comments below. I would love to hear your thoughts. In the coming videos, I'll be sharing more stocks like these and explain how I took those trades. Now, I want to keep it real with you. Trading isn't easy, and it's not for everyone, and there is no shortcuts to it. But if you have the right mindset and approach, you can succeed. Focus on learning and improving one step at a time. Don't chase money, chase consistency. Remember, market is the king. So anything that the market gives you, just take it. If you found this video helpful, please hit the like button and subscribe for more trading insights. Let's simplify trading together. See you on the next one. Bye.